G'day legends! In this video, I'm going to be talking about risk versus reward. This is essentially the way trading works in its entirety. You need to do this before you start trading. The first thing you want to do is calculate your R. And the way we calculate our R is like this. We take our total portfolio, say you're starting with 100,000, and you look at risking 1 to 2% per trade. So this gives us the calculation for our R. Our total portfolio times 1 to 2%. So say our R is $1,000. This means that we will be risking $1,000 per trade. Now if we only take trades with a 2 to 1 risk to reward ratio minimum, and we take a series of trades, you can still be wrong more than you're right and make money. So if you look here, we've had 6 losing trades and only 4 winners. But each of our winners provided us with much more than we lost when we were wrong. So you can see here there are 6 losses, totaling at 6,000 in losses, 4 wins, and we ended up $2,000 ahead. Only 4 wins out of 10. Now obviously this can grow if you take trades with bigger R, etc. You don't want to just be taking trades for the sake of it though, you need to have clear levels of invalidation. Now a really good thing to do when you're first getting used to the way these markets work, and I'm going to teach you about levels to put your stop loss for invalidation, etc. But you can start with paper trading. Now if we come down here, you can see on TradingView you can click trade. This will bring up a panel on the right hand side, and this is what's going to allow us to calculate our R. Stay with me. So before I look at placing a trade or doing anything, I want to analyze the charts. I can see here that Bitcoin is potentially put in a swing low and might be drawing towards this fair value gap through here. And so I look at this trade and say, okay, well, we might be going to this fair value gap. I want to go to the left hand side and click long position. Where I click needs to be where I'm looking to enter the market. This is going to help me calculate my R. Where I drag my stop to, this red box below, is going to be our stop loss. This is where the market needs to go to invalidate the trade. Now if I pull this green box up, you can see that my risk to reward ratio, or my R, will begin to grow. The same thing will happen if I move my stop loss. Right, now the first thing you need to do is identify your trade idea. So if our trade idea is that Bitcoin has bottomed here, and we're looking to trade into, say, this fair value gap above, then I can look at this and say, okay, I need to find an entry. Say I want to get a pullback into here, and I pull my stop loss to these lows. Right, this is going to be my level of invalidation. Now I move this up, and I bring this green box to the level I'm targeting, and I can see that this gives me a 2.2 R trade. Now if I move to the right hand side, I can start to look at paper trading this. So what I can do is type in price. So I want to get in at this level through here, 108064. So I go up to price in this limit order, 064. And then I want to go to stop loss. My stop loss needs to be where my invalidation is under this swing low. So I can see here 106680, and that gives me my stop loss. Now up here at risk, what I want to do is make sure that this always stays at whatever my R is. So we calculated our R to be $1,000. So my risk then goes to $1,000. Now if you look on the left hand side here, what this has done is it's changed the amount of units in the trade. So now I've risked $1,000 exactly. I've used the calculator to calculate how many units to buy. And this will give me my R. So you can see 2.2 R. And I'll pull this up and I say, okay, I want my take profit at 111127. So I move here, 111127. Now I can see that my risk is only $1,000. My R is 2.21. So I will stand to make $2,200 if this trade idea is correct. Now if you can get into these trades earlier, you can end up getting a much bigger risk to reward ratio. The caveat with this is that the longer this trade plays out, the more you see price action, the more confirmation you have of the trade. So you need to find a balance between getting in at the right time when there is enough confirmation, and also making sure that your R is there. Because if I get in all the way up here, I'm only going to be able to get 1 R out of this trade. It's not worth taking, because over time it means that I have to be right more than 50% of the time. And trading isn't about being right all the time. It's about balancing probabilities and weighing them in your favor so that over time your trades are more profitable as a whole. Some traders will take 2R trades, some traders will be right 30% of the time, but all of their trades are for 8R. You need to find the balance with that. And your balance shouldn't be based around your R, it should be based around what you know about the market. Now to summarize, the first thing you need to do is calculate your R before you trade. The next thing I would do is jump onto TradingView and paper trade. Don't use real money in the market just yet if you don't know what you're doing. In these next few videos, I'm going to show you how to read the markets and how we find our targets, how we find our invalidation, and how we set up these trades. I look forward to it. Take care.